In this video, we'll discuss the benefits of using an S Corp. But before we get started, please make sure to like, subscribe, and turn on that notification bell. So to begin, what is an S corporation? Well, an S corporation is an entity that only faces one level of taxation. And this is unlike the C corporation, which faces two levels of taxation, one at the entity level and the second at the individual level. With an S Corp, S Corps only face one level of taxation at the individual level. And the S Corp business entity can either be set up as a corporation or an LLC. But regardless of whether you use a corporation or an LLC, you must make the S Corp election by filling out IRS Form 2553. And you'll certainly need to make this S Corp tax filing to reap the S Corp's benefits. So what are some of the benefits that the S Corp has to offer? Well, there's lots of small business benefits when being taxed as an S Corp. And the first benefit, as I mentioned, is the pass-through taxation that the S Corp has to offer. And this is because all the business profits pass through onto your individual tax return, and you only pay tax at the individual level. And this is unlike C Corps, which face two levels of taxation. C Corps have one level of taxation at the business level, and this is usually that 21% corporate income tax that you hear about. Then, if any dividends are paid out to the shareholders, those shareholders face a second tax at their individual level that they pay on their individual tax returns. And that tax rate can be as high as 37%. And with the S Corp, all taxes from the business pass through onto the individual owner's tax return, and they pay tax at their individual tax rate. And this can also happen when S Corp distributions are made. And this can come in handy because the S Corp owner only pays tax at their individual rate, which can be as high as 37%. But in that situation, they bypass the 21% corporate tax completely. And the second benefit of using an S Corp is that you can use it to minimize payroll taxes as well as self-employment taxes. And this is because if you have an active business, you must set a salary for yourself. And when you do, you must pay the 15.3% in payroll taxes on the salary that you set for yourself. And these payroll taxes go to things like Medicare and Social Security. But the benefit here is that you only pay the payroll tax on the salary that you set for yourself. However, that salary must be reasonable. So here's an easy example of how this can be used. Let's say that you have a business and you made $100,000 in your first year, and you're the only employee. If you don't set a salary for yourself, you're paying that 15.3% in payroll taxes on the entire $100,000 of revenue. So in this case, you'd be paying $15,300 in payroll tax. However, if you set a salary for yourself of $50,000 and that salary's reasonable, then you're only paying the 15.3% payroll tax on that $50,000 salary that you set for yourself. So in this situation, you're only paying $7,700 in payroll tax. And with that reasonable salary, you save yourself almost $8,000 in payroll taxes. And this is the benefit of having an entity that's taxed as an S Corp, because you can set a salary and minimize the payroll taxes that you pay to the IRS. Now, with this in mind, what are the S Corp disadvantages? Well, the main disadvantage to using an S Corp is the ownership restrictions that are associated with it. And this is because S Corps can only be owned by 100 or fewer shareholders. And on top of that, all of those shareholders must be U.S. citizens. And this differs from C Corps because C Corps can be owned by domestic citizens, foreign citizens, as well as other business entities. And lastly, S Corps can only issue one class of stock. And on the other hand, C Corps can issue 2 or more types of stock to its shareholders. And this is so whether it's common stock, preferred stock, or other types of stock. So in conclusion, S Corps can come in handy when they're used to run a small business. And one reason is due to the ownership restrictions associated with them. However, you can also use it to minimize the payroll taxes that you pay to Uncle Sam. And this is why if you properly use S Corps, they can minimize your tax burden. And if you need help forming an S Corp, my company Corporate Direct would be happy to assist. You can schedule a free 15-minute consultation by clicking the link in the description below. And if you mention that Ted from YouTube sent you there, you get $100 off on your S Corp formation. But before you go, I want to let you know that this is the 100th episode that I've recorded. I've been doing this for about 2 years, and the feedback that I've received from all of you has been great. I want to personally thank Ryland and Anthony, as well as Wyatt Revilio from WR Media and Videography. They're the ones who brought this to life, who've done a really good job with the videography and the editing. So I want to thank them because none of this would be possible without their help. And as well, all the feedback that I've gotten from you guys has been great, and that really does mean a lot to me. So now that we have 100 episodes under our belt, I certainly look forward to creating more content for everyone out there in the future.